All right, so let's go over our bearish back formation, a harmonic pattern. Let's do it with rules based. Okay, so let's look for a bullish bat. The rules for me for a bullish bat formation go as follows. You gotta have an X to A leg. The X to A leg has to break structure to the left. I need this to be an impulse leg, not an anchor leg, an impulse leg. So it has to break previous structure. After I get the X to A, I look for a 50% retracement. I like the 50% retracement because whenever I'm going back for the C leg, it says I might get a double top. I would have to look for something in this area to take a trade or any of that stuff. But um, so the C leg can't break the A leg. So I gotta have an X to A. The B leg has to come to the 50%. It can wick below the 50%. It just can't hit the 61.8. The C leg has to be a minimum of a 38.2. It can come all the way to the A leg as long as we don't break it, as long as we don't wick above it. The D point is the 88.6 of the whole pattern. To get the 88.6, we would measure from the X to the A leg, the whole pattern, and it retraces to the 88.6. So let's do it again. For the bullish bat, we gotta have the X to A leg. The X to A leg has to break structure. Let me show you what I mean. So price is going up, it's going up, and then it falls. And then it starts going up again until it makes the A leg. The A leg breaks structure to the left. This will be considered a lower high. If we can get a retracement to the 88.6, then our profit taking levels will be the 382, 38.2, and the 61.8. And we get that from measuring from the A leg to the D leg. Let's clean this up a little bit. I believe that's right. I don't need that, I don't think. Okay. Let me just do that. Okay. Sure did. All right. So X to A has to break structure to the left. B leg has to be a 50%. It can't touch the 61.8. C leg is a minimum of a 38.2. You can come all the way up to the A leg, it just can't break it. D point is the 88.6 of the whole pattern. Take profit levels is going to be measured from the A leg to the D leg. Take profit 1 is going to be the 38.2. Take profit 2 is going to be the 61.8. All right. Our stop loss is always going to be the 113 of the X point. And that'll allow us to get a minimum of a risk to reward profile of a 1 to 1. Maybe a little bit more. Remember, we're going to front run these targets. So they're not going to shoot all the way for 38.2. They're going to front run them just a little bit to give them a little bit of wiggle room. Okay. So that'll give us a little over a 1-to-1 risk reward. Take profit 2 is going to be the 61.8, and that'll give us a 2. That'll give us a 2. Allow us to get stops below the 113 down here. We can shoot for something like that. So let's look for a bullish bat. I know there's one right here. So price is just flowing sideways, really, until we explode up here. Okay, so that breaks previous structure to the left, right here. We're looking for, if it falls down to here, maybe these will be support levels. We're just making a guess. So this 191 would be my X leg. This would be my impulse leg right here. So my X point would be 191, 92. My impulse leg would go all the way up here to 301, 302. Our B retracement would come right here to 50% at 244. Our C leg would come all the way up here at 282. Our D point is right 88.6, right there. Getting stops below here. Our X point. We've got to get stops below that X point. We're looking at the 113 because I always use the 113. You know, some people use different ATRs. I like the 113. So So did we ever hit take profit 1 on this? So if we measure from the A to the D, did we ever hit the 38.2? I don't think so. Nope. So we're still floating in this trade sideways. We're looking at entering here. I mean, minimum, we're looking for the 38.2. Stops below the 113. And that'll give us a 1.1 risk reward, which is not the best. But it is a minimum of 1 to 1, so it works. So we went pushed up, we didn't hit target, we pushed down, we pushed up, we didn't hit target, we're coming all the way down here, we never hit the stop loss. And now it looks like we're pushing up, and I'm not sure what's going to happen. But I know that the people that entered this trade are still tracking price. So now they're measuring from here, 182 being the whole pattern. So as price moved down, they're having to move Fibonacci retracement to get the new 38.2. So the new 38.2 would be right here. You can see how it cut down their risk to reward. So now they're getting a 0.84 because price moved down. So now they started out off with a 1 to 1, but now it's no longer that. Okay, so if that's the bullish bat formation. I'm just always looking for those 3-point moves. I know that I've got one here. I know I got one here. This would be an impulse leg. I could look for extended targets up here at 650. I believe the 61.8, 1618 comes in there at 650. It seems like they could have entered right here at this 61.8, 171. Also know that I have I got a 3-point move right here. Right here. 3-point move, breaks previous structure to the left. I know if we pull back in here to 203, would be the 61.8. This is trend continuation trade. This is my structure that it broke. This is my new impulse leg. This will be my pullback to the 61.8 right here. At this price, I can look at getting long here at 203, which I did. I know that 400 is going to be the 1618 of this 3-point move, and that'll allow me to get a little bit more than a 2 to 1. I mean, a little bit more than a 2.23 risk to reward. And that 61.8, 1618 comes right in there at $400, an even handle number. Could be looking at this probably looking to break above previous swing high here at 300. We're looking for a close above. We're looking for a close above previous structure. If we can push up, this 301 will be a lower high. If we can push up to 400, then we will have a new impulse leg that breaks previous structure to the left. Once we get that new impulse leg, it starts all over. So then we would measure from the lowest point of the pullback. It looks to be right here at 184. If we just push straight up from here, perfect world, push up to 400, then we could look for a pullback to 268, because we know at this price it gives us a minimum risk reward profile of 1 to 1. It allows us to shoot for extended targets. Take profit 3 would be the 1618 up here. Would be 544. So if we got to push up like that again, then we would have a new impulse leg that breaks previous structure to the left. We would have a new higher low. We would have a new higher high up here. If we got all that, then we could look for a retracement to the 61.8 level. If we got that, we know it's just redundant. Same thing over and over again. Same thing. We could look for a double bottom here. We could look for a 3-bar reversal. We could look for a higher high, higher close candle. We could look for a little bit more. But if we bought here at 207 and just say, the highest take profit I found was 650, was it? Maybe. So of this swing, of this impulse leg right here. So this impulse leg, if we're looking for extensions of it, we're going from $28.9 to $415 back down to $29. This impulse leg breaks previous structure to the left right here. So if we bought at 202, and we're looking for 650, we're getting a 5.18 risk to reward. If we're looking for 400, we're getting a 2.21. I'm still looking for 650. And there's another trade on the 5-minute time frame. I'll never have enough time to show you, but it's a double bottom 2618 trade. Here's the double bottom, and I appreciate y'all. If y'all hang out this long, I appreciate it. So if we get a pullback down to there, then we could look for